Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, June 1st. Hope all you guys had a great holiday weekend and you took the opportunity to recharge your batteries, do something fun. Now we are starting June already. So let's dive into the futures for a quick look. And don't forget, you can run the video at 1.25x or even 1.5x down in your video controls to cut the time of the video down. I think there'll be plenty of opportunities for you to either pause the video, take notes, etc. So cut the runtime down a little bit. Anyhow, equities are up, broadly speaking, about 0.4%. Oil's had a nice morning, up 2.5–3%. And don't forget, there's a OPEC Plus meeting going on right now over in Vienna, where they're expected to approve a small production increase. So interesting that the oil is jumping, and we're over $70 on Brent in trading this morning in Europe. So oil looks like it's heading higher. Copper's flat. Gold's holding 1900. It was up nicely in the pre-market. It's dropped back a little bit, but still above 1900. Silver's up 1%. Looking over at the macro calendar today, we've got PMI and ISM manufacturing numbers. Those will be closely watched. We've also got construction spending, the Dallas Fed, and we've got a couple of Fed speakers today. And I also want to make mention of NVIDIA's upcoming stock split that I guess is scheduled for June 19th. NVIDIA's had a good run after earnings, and with that stock split announcement, that might be something you can catch a runner on for a couple of weeks into that stock split announcement. I haven't looked at the chart closely, but that, it tends to capture the imagination of retail traders, and they want to pile in before that announcement. So that might be something you'll be able to take advantage of for the next couple of weeks. Have to see how it plays out. Let's check in with the indexes and FATMAAN, and then I want to go over the oil charts. I got a couple, and then I have a couple of charts for you as well. So on SPY 2 hour, I think what we're still trying to resolve is, are we going to break out, meaningfully break out above, first of all, hold 420 and then break out to new highs and hold it? Or are we just going to, chop around in a narrow range for the foreseeable future, waiting for a catalyst? We've got a Fed meeting in a couple of weeks, I guess. Everybody will be listening to Powell, who, by the way, speaks on Friday this week. Everybody will be listening to him. But, looking for signs of tapering. In the minutes last week, there were, more Fed governors willing to actually discuss it. Now, does that mean they're going to do anything short term? I doubt it. But you never know how these things are interpreted by the market. It's good to have that in the background of what's going on, but really all that matters is the price action. And I think here, 420 remains your main pivot. Now we're going to open up in this 421 range if the pre-market action holds till 9:30. I'm starting this video, it's at 6:20 in the morning, so we still got 3 hours before the bell. But it seems like we've had this pattern emerging where we drift up overnight, and then we're faced with an open gap below when the regular session starts. And you can see from these prior days, here was a gap up open, did nothing all day, then came back to fill it in the close. We had a gap up on Friday, moved up, did nothing, pulled back into the close. There's actually a little gap here that I don't have marked, but there is one there. And then now this morning we'll gap up again, and then see if we do anything in the regular session or just kind of oscillate and then pull back into the close to maybe fill that gap. But anyways, that's been the recurring theme here lately on the indexes. Here it is on the 30-minute chart, and here's that little gap I was talking about between, let's call it 419 and a quarter and 420. So we'll have that to contend with if and when price does pull back and tries to fill it, etc. But use 420 as your pivot. And if we were to, jump up above 421.50 or even up towards 423 at the prior highs, those would be opportunities, like we always say, to roll up your stops or your strikes in order to, book those gains that you have and then reset at a new pivot level for you active traders. Moving on to the Qs, very much the same thing, but you can see the chart looks totally different than SPY, which is, challenging the old highs, whereas the Qs, we're still trying to take out this breakdown candle action at 337. So a lot more work to do in the Qs versus the SPY as far as driving to new highs. I think today, continue to use that 334.50 as your pivot. I think you're okay being long above it, and then look for 337 and possibly 339 on the upside. But if we hesitate or pull back, I think it's vulnerable down to 332. And then that would be a real big level to hold, 322, because below that, we've got this open gap down here at 329. And price would probably come down here to test that gap. Probably get a bounce on the first touch like we normally plan on. Come up and then, possibly come back down to fill it. So that unfinished business would be taken care of, at least at this level. And notice too that we've also got this gold moving average, which is the 50 on the daily, coming right in towards the top of this gap. So, if we come down, touch this gap, maybe overshoot it a little bit, and then run into the 50 and then bounce back up. So be aware of that scenario. Qs, 30-minute chart, exploded view. Here you can see that 334.25 area, 332, and then we got some little resistance areas above. So you can play those as you see fit, either getting long on a breakout or getting long on a pullback to like 332, something like that. And that would give you a real objective entry there to stay long. If we did get that pullback to 332, get long there, then look for a move back up to 334, possibly 336. But like I said, we're going to open up with a gap below, and we'll see how that open is handled. Moving on to IWM, pretty interesting chart here. IWM has been doing well off of the floor. This 225.50, you can see, was a pretty important level on this time frame. We had a rejection here and then multiple rejections back in time. So price broke above and then has pulled back to that key support area, 225.50. I think as long as price is holding that level, you can be long, and then look for 227.50, 228 as a first target, and then above that, 229, 230 area on the way back up. And of course, on the downside, you don't want to see that level, lost or a price move below it, because then you're back in this big trading range again and, kind of back into the soup. Once you break out of a nice range, you want to be able to hold that So I'll be watching that very closely. And I think if it did break that, I think you've got let's look at the 30-minute chart. You've got a decent shorting opportunity below 225.50, because then you've got an open gap down here that has yet to be filled, and you're moving into a relative void right below where there hasn't been a ton of trading. So you could see price come back in here, fill this gap, and even fall all the way back to 222. So that would be a decent shorting opportunity if in fact price does fall back into that larger trading range below 225.50. Facebook came up here to 332 last few days, couldn't take that out, and then pulled back into the close on Friday. Facebook, however, remains really strong. I'd be looking for long entries. If I didn't look pre-market where it was at, I assume it's going to be up a little bit. But if it came back in here to 326, 326.25, something like that, I would be an interested buyer here. Notice the large volume over price bar here that should act as support. So if we got to pull back into 326, I think that would be a good place to try a shot long, and then look for 330 and then 332. If we gap up and then we take out the prior highs at this 332.25, I think, new highs you got to buy. So get long against that level, and then you'll be in blue sky territory with everybody being profitable, no motivated sellers, as it were. So if you get this breakout here, I wouldn't hesitate being long Facebook, and then you can have your stop, just below your entry somewhere in case price turns around. Apple looks totally different than the other charts. It's been really weak. We noted this 128 area with the convergence of the 20 and the 50 on the daily chart, could not break above that and has gone back the other way. Filled this open gap on Friday. So now I think your pivot's 124.50. It's got to hold that, or it's going to come back in, lose a couple more bucks, come back into 122.50 and test this prior low. So Apple's been basically soggy. If you like to trade it, actively trade it, knock yourself out. But I think at least the near term moves are relatively bounded by 128 on the top side, and the bottom side 122.50. Of course, if you lost the prior low, then that should bring in a new wave of sellers if things get really soggy. But if you get a pullback into 122.50 and it holds, that would be a good objective try for a long at that level. But for longer term kind of view, you want to see 128 taken out, and then you'll have those daily EMAs as support beneath price if you can get a breakout above 128. We've had these levels marked out on Tesla pretty well. I mean, we had the breakout from 595, and then it's just been grinding higher. And actually on Friday, we got close to tagging this 640 area. And then above that, we've got the top of the downtrend channel around 650. So on the top side, as long as we can hold 625, I think you can be long and shooting for 650. If you drop back down below 625 in this midpoint line, then price is going to be vulnerable to come all the way back to 595, and of course bulls don't want to see that. If you're looking for Tesla on a much longer term kind of a thing, we've had this long-standing pivot at 670. That would be a place where, if you recaptured that level, I think that would be relatively important. I have to check the daily charts to make sure of that. But, breaking this downtrend channel would be important technically, and then recapturing this 670 pivot would be important as well. So Tesla's price action has looked a lot better lately than, of course, over in this area where it was seeing a lot of selling pressure. Microsoft, I've got a pivot down here at 249. Price showed a lot of resistance here at 252. You can see all the time spent at 252 not being able to get through. So if there was some weakness in the days ahead, either 249 or down here at 247.50 at the top of the gap, you could get long and look for 252. But in order to get some real upside traction, you're going to need to take out this 252 level, and then you can look towards 253 and then the bottom of this larger gap above at 256. That would be the initial overhead targets on a breakout above 252. Amazon's been soggy. I was kind of hopeful right in here where price broke above this 32.50 pivot, but then it took 2 days and came back. So it's kind of in this choppy range. I think it's pretty clear. 32.50 is going to be an important level. Here in the middle of the range, I don't think you can really do anything. You've got to wait for a price either to come back into 3,200, fill this gap. That would be a place to get long above or short below. Or if we get a gap open this morning and it gets above 3,200, then you can be long and look for 3,300. So key off at 3,250 and 3,200 as your actionable levels on your active trading. Google, soggy couple of days here. Came up to 23.90 and then has given some back. I think today 23.50 is the pretty obvious pivot. Got to hold that level. I think you can get long there and look for 23.73-ish and then 23.90 as a second target. If this morning we gap up and break higher, I think you can get long against 23.70 and look for 23.90. And by all means, if we break above 23.90, then certainly be long and look for 24.30 at the prior highs. I think that would definitely be in the cards on a breakout above 23.90. Netflix has been holding this 500 level that we've been talking about. Made a nice move on Friday, but then gave it all back. So technically nothing much has happened for all this period of time. The only technical event that's happened is we recaptured 500, and price has not been able to really make any headway to get to the top of the box. But that is your target, 515. That's your T1 above 500, getting up to 515. And then a break above 515 opens up all these intermediate targets within this larger gap up to 550. We've got 22.50 and then $10 increments all the way up. So if you're not participating in Netflix during this chop, what you can do is just simply set your alarm at 515. And then that will be your entry point on a move into this larger gap. And then always on the downside, below 500, then your first target's going to be 492.50. and then 485 if it moves back into this trading range. Semis have been really strong. We got this move off of this double bottom low, and we've gone pretty much straight up since. We've recaptured all the moving averages. We've recaptured this key level here at 242.50. I think that's your go, no-go line. If you got long here or at any point below, I think you move up your stops and your strikes to 242.50 and then continue to be long and see if you can get a move up to this 257 level at the prior highs. That would be my target there. And for those of you that are not already in, I think you kind of got to get a pullback into 242.50. If you got that, I think you can be a buyer right there with having all the moving averages below. Let's look at the 60-minute chart real quick. We filled this gap on Friday. So now, if you're an active trader, you can use the top of the gap as a pivot location at 250. So, this morning, if it price pops above or even pops above and comes back to 250, get long there and look for 253. That would be my first target. But below 250, the bottom of the gap is your first support at 247.50. So now, before we get into oil, I want to thank any new visitors to the YouTube channel. I hope you're seeing some benefit in having these levels called out, give you some objective levels to shoot against in your active trading. That should help you become more profitable, knowing where those key pivots are and then working on your execution around them. Hit the subscribe button and the like and the alarm bell. That way you'll get notified of all my new content, and you can actually even go over in the show notes, and there are links to the website and also a link to register for all my content, and that way everything that I publish will be sent to you in a nice, neat email. I send out a lot of midday notes and trade ideas and stuff like that never make it to YouTube, so that would be a smart thing to do. And of course, longtime viewers, thank you. I hope your trading's going well, and I hope the levels are helping you as well. Hit the like button and leave a nice comment. Pass the link along to somebody in your trading group that may benefit from it. I would certainly appreciate that effort. Okay, oil has had my attention lately. It is 50% of the commodity basket, and I think it's something that's visible to to consumers as the price of gas ratchets up. And so we're up 2.5–3% this morning. I mean, you can see from this weekly chart, the door is now open to these prior highs up in the mid-70s. If you drill down on daily charts and hourly charts, you'll find some intermediate levels. But just looking at the big picture, as long as we've broken above 65 now, I think the path to 70 and 75 open up for oil. And don't forget, we're entering the heavy driving season after Memorial Day. I think you're going to see a lot of gasoline demand as the COVID lockdowns and stir crazy element with consumers wanting to get out and do something, summer vacations, vaccinations, ramped up, etc. And I think on the global market as well, a lot of countries are on the upswing as far as vaccinations, protection from the virus, increasing consumer confidence, that kind of thing. I think you'll see strong demand over the summer. And as I say in the blog notes this morning, I think you're going to see a very muted response by domestic producers to scramble to ramp production. I think the supply response from domestic producers is going to be very much muted. I don't think they're going to run out and punch a bunch of new wells, trying like, oh my God, the bonanza's on, right? Go out, spend a lot of CapEx, drill a bunch of holes at this stage. I think their access to unfettered capital has been severely cut back. Number one, private equity was really burned on the last cycle where they lent a bunch of money to any and all producers, and they went out and punched a bunch of holes, and then right at the top, and then the big down cycle. I think private equity lost a lot of money in that episode, so I think they're gun shy. And also, as we've been discussing, the ESG element, we just had that play out last week with that little puny micro activist group. This engine number one was able to get in the heads of Exxon shareholders to grab a couple of board seats on the mighty Exxon. And, they're going to be able to influence CapEx going forward and kind of drive Exxon to do more in the renewable field and cut back on traditional exploration. So I think that story at different levels is going to play out in the oil patch domestically and even globally. We saw last week Shell get hit by a European judge. Hey, you got to ramp up ESG. You got to reduce your carbon footprint. As a legal outcome. So I don't see a mad scramble to go out and ramp oil production. And I think, as the demand uptake increases, I think there's going to be a bid under oil, making a long story short. And, we push towards 70, 75. You're going to see gas in the mid threes domestically. And then I think the shit hits the fan when and if gas gets into the low fours. You're going to see an outrage amongst consumers when it gets to that level. And then we'll see what happens as far as supply goes and, a political response and all that kind of thing. So that was a very long-winded way of saying I think you want energy exposure, whether you trade it directly through either futures or USO here, the ETF that tracks oil futures, breaking out here above 45.50. I think you'll get a path higher here on this breakout, and then you can use 45.50 as an area for a stop. But notice all the moving averages are bullishly stacked, and those are going to start bending higher as time goes on. With price breaking out. So here's a chart of Continental Resources. Really nice line to shoot against here at 32. Just starting to break out to a new level after being in this trading range for quite a while. I think that represents, the kind of setup that I'm looking for, where you've got a line to shoot against, whether it's Continental or another name that you find. Just make sure you're not out in space when you take that long position, because then, you're vulnerable to a pullback. At least with this setup, you've got a clear line to shoot against. You don't want to see price come back in below 32 here, or else it would look like a failed breakout. So, of course, now this morning you're probably going to see a jump just because the oil price is up. So I'm not saying, get it at 9:31 this morning. What I am saying is get some exposure to the energy patch, whether that's through equities or oil itself. I think it's going higher. And then here's a refiner chart. This is Valero on the weekly. You can see here that same kind of look, prior high, pull back, now back at the prior high. I think on the weekly chart, you get a breakout above 82.50. Then it's got some runway up to 92.50. And I think refiners are going to do pretty good in this environment with the driving season, all that stuff in front of us. I think they'll be cranking, and I think the proof is in the pudding in the charts. But I like the setup here on a breakout above 82.50, and you can look at the other refiners. You got what do you got? Marathon. You've got Holly Frontier, HFC, is another ticker in the refining space you may want to take a look at. I have not looked at that chart, just saying that that's another refiner you may want to investigate. And then let's wrap up with this little financial that I found. It's called BGC Partners. BGC Partners. What got me looking at this chart is I saw a lot of call buying activity in the name, and the chart looks pretty productive. I mean, we're grinding higher. Nice trend line to follow. Price is right here at resistance at like 590. Yeah, 590. You get a breakout above 6. I think you've got some running room there. Just coming off of this touch of support, I think that would give you some open runway. I really like this PPO profile here, where you got this. Well, let's just take it from the top. You had a high, pull back to trend, gave you the PPO reset and bull cross, came back up, pull back to trend. You got PPO pulling back to the zero line, bull cross. Next advance, pull back to trend, pull back in PPO, bull cross, and now I think it's ready for the next upcycle. And notice that RSI has not really dropped below 50 for any appreciable amount of time. Now it's back above. So I think RSI, PPO, and price action would lend you to believe that this one's going higher. And coupled with the option activity that I saw on Thursday and Friday, I think that bodes well. So if you want to set yourself an alarm there at $6, I think that would be a good place to try along on this small financial name. So let's wrap it up here. Let's see how the short week unfolds as we move into June. See if there's any catalysts out there that can, pop price on SPY, get it above 420, grind higher into new highs, and let's see how tech does this week. It's got a lot more work to do than SPY, so I want to watch that carefully. Watch the FATMAAN names as we always do, and then let's go through the energy charts and find some good setups there as oil looks like it's breaking out. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.